welcome to the next panel discussion. And you can still see it on the top right-hand corner, stablecoins. It was just mentioned before, and a lot has been said already about CBDCs, about the digital euro, but we now want to look at stablecoins, and we want to look at stablecoins in relation to MiCAR, because there are only a few months left until, well, MiCAR enters into force for stablecoins, so this will happen this summer. And what that means for the sector, we want to discuss. And therefore, I welcome Jens Siebert from KPMG, Gregory Klumov from Stasis, Ralf Kubli from the Casper Association, and hopefully, if the technical stuff works, then we will also have Patrick Hansen from Circle joining us virtually. Just looking at Marcel, do you know if we will have Patrick joining? Technics?
They are working on it.
All right, they are working on it. So then let's just start. Let's involve the audience. So we've heard about MiCAR, but a show of hands, who knows what the acronym MiCAR stands for and can explain it? All right. Nice. Okay, so I think we have some experts here who might be able to shine a light on this before we dive deeper into this. Jens, in a very brief explanation, could you say something? What do you have to do with MiCAR? Can you explain what MiCAR is? And then we continue the discussion and hopefully also have our fourth panelist with us.
Thank you very much. So as discussed before, I have 20 minutes, right, to introduce MiCAR?
Yes, exactly. Everybody is thrilled to hear 20 minutes. But
no, I will try to make it short and on the point. So markets in crypto assets regulation, that's MiCAR. It's a quite impressive piece of regulation that turns into effect in June and December this year. So what is MiCAR really doing? I think it provides a comprehensive regulatory framework for crypto assets and crypto asset related services within the entire European Union. And as a regulation, it's directly applicable in all 27 member states. So meaning it's not comparable to, for example, the MiFID directive that first had to be translated into national law, but MiCAR as a regulation directly turns effective in all member states. It not just only includes stablecoins, but also sets the regulatory framework for all, let's say, services related to crypto assets. So it establishes 10 new so-called crypto asset services within the entire EU. But it also establishes a regulatory framework for the issuance and servicing of stablecoins within the entire European Union. And why do I believe it's quite impressive piece of regulation, and it's good that we are talking about MiCAR and also stablecoins under MiCAR today, is it really sets a single market for crypto among the entire European Union with almost 450 million citizens in the EU, and by definition, it creates the biggest single market for regulated crypto services and regulated stablecoins on a global basis. So I think that's quite MiCAR in a nutshell.
Short and crisp, how we like it. And I think now we have Patrick also joining us virtually behind us on screen. So you, of course, know what MiCAR stands for, but could you maybe dive a little bit deeper and give us a quick explanation about what is MiCAR's mandate for stablecoins exactly, and what does that mean for the whole, for Europe, basically?
Yeah, happy to. Thanks, Benedikt, and hi, everyone. Patrick here. Sorry for not being on stage with you guys. Would have loved to be there with you in Frankfurt, but unfortunately, I had planned my vacation already, so we'll change that next time. I hope you can hear me. I mean, very shortly, for stablecoins, I think MiCAR's overarching goal was to create regulatory certainty and to create, an overarching framework that could fit those new business models and those new products that were popping up in the market. I think we're all aware that the assent and essentially the publication of the Libra white paper in I think June 2019 was one of the major triggers that sparked and accelerated the development of MiCAR. And so essentially what MiCAR did in its final adoption and in its finally adopted framework is it creates two different product categories that stablecoins could fit into. One is the e-money token category for stablecoins that refer to one single fiat currency, and the other one is the asset reference token category for tokens that refer, for example, to baskets of fiat currencies or crypto assets or commodities. And so I think industry participants can look at those two categories, can see what suits their business model, their business plan, their strategy, etc., and can obviously apply for the necessary licenses and comply with the necessary requirements in order to benefit from that regulatory clarity going forward in the EU.
Thanks, Patrick. Before we continue, just quick head up to the techniques. Could we get Patrick on the screen here? Then we don't have to turn our heads all the time to hear him. But while you do that, thank you very much. I would like to continue with Greg. So you've been in the crypto space and you've been closely monitoring how MiCAR was developed, how all the regulations before that were developed. So how does MiCAR fit into the regulatory systems that already existed across the EU countries, and how does it fit in basically?
So again, as Patrick mentioned, there was this Libra coin, which was supposed to be launched by Facebook. And unofficially, MiCAR was the Libra killer among politicians and some government officials, that they didn't want that product to be available for the local market. And crypto market is quite significant in Europe. If we could do another poll, can you raise your hand if you own any crypto, regardless Bitcoin, Ethereum, some stable coins? So see a significant crowd. According to chain analysis, 20% of all crypto transactions either originate or terminate in Europe. So we are talking about 80 million people potentially in Europe have exposure to these assets. And it's ironic that all of you guys who transact in euros, we are facing some additional fees when we trade through dollar stable coins, because no intermediary is offering us a forex fair rate to trade these instruments into our currency, which are balance sheet currency, right? And so I'm glad that MiCAR finally came out, but it came out for the wrong reason. The reason was to kill Libra, but in a sense it leveled the playing field, and now, ironically enough, it's the world's only regulation on this product. There is no other place big and significant enough with crypto users, crypto communities exposure that has clear set of rules. Are they the best? Are they good? Well, no, I mean, but it's something. It's something to start a new thread, a new kind of chapter in the crypto cycle, in the crypto market, to finally operate these products under clear regulation. And what I'm really excited about, it finally will become passportable. So I run a stablecoin out of Malta, a euro stablecoin. I started it back in 2017, and I was the first, I think, to bring a top auditor to the place. I wrote 2 books on digital asset regulation together with, unfortunately passed away, Philip Sandner. And I've been speaking on this conference for all 6 years, speaking about the importance of the regulation of this simple product. And the problem with my license in Malta that it's not passportable. So I can work with the customers from all over the world if they come to me, but I cannot place any ad. I mean, probably some of you heard of my project, but most of Europeans haven't heard that the proper stablecoin backed by euro existed since 2018. And the reason is because I couldn't advertise. So what MiCAR changes, its passportability. So having any 27 member state license, I would be able to tell the world about this product. And this is really exciting piece of this legislation.
All right, so we dove right into the regulatory aspects of MiCAR, but I want to give the chance to you, Ralph, to talk a little bit also about public protocols versus all the debates we've seen about the stable coins that are they're not that public, so to say. So what do you do, and what is your impact on this?
Yeah, so as a kind of like the another representative, but you know, as an officer of a public of an entity that runs a public blockchain, you start to be quite concerned about some of the things that are noted in this regulation, right? Because certain liabilities and certain aspects of the responsibilities of the officers or the certain people engaged in these transactions are going to be quite onerous and quite difficult. What is the biggest challenge, of course, I think, for the industry, but certainly for public chains, will be you know, this idea of, and for the users, is this idea of uniformity of money. I'm very concerned about that. So we heard this morning, you know, the gentleman from Evonik basically saying, well, I have transacted with digital representation of money for a while already, and I'd like to continue that, and you know, just give me better service. And if protocols like ours come up with solutions, then possibly there's a fracturing of liquidity, for example, that could be really a big challenge. So that is one area that I'm quite concerned about. One thing, Philip, maybe for Libra, you know, as you may hear from my accent, I am Swiss, so I do specifically remember. And you know, it's great that in Europe there was regulation to kill Libra, but you know, we actually had the Americans visit, so Switzerland, to kill it. So that was a kind of a different experience that we had, right? So yeah.
Maybe to just add on what has been said before, I think kind of was exciting also for us as a firm is who actually reached out to us when MiCAR kind of was published in the EU journal, and the opportunity to really issue a fully regulated stablecoin among the EU kind of became present to many actors in the market. It was really from, let's say, very conservative state-owned banks all the way down to fintechs reached out with often dollar signs in their eyes, really seeing what is the opportunity here to issue a non-interest-bearing stablecoin and taking all of the reserve money into high-quality liquid assets and overnight, and really making like a very nice business case based on this. And I really don't want to be kind of the spoil sport here, saying we should not be too optimistic. I think it's good that we have some decent piece of regulation now in place, and really a comprehensive framework for regulated stablecoins among the EU. But the regulatory requirements are also significant. We have to keep in mind that every e-money token, as they are referred to in MiCAR, is e-money. So the e-money directive fully applies. You need to have an e-money institute license in order to be an issuer, or you need to be a CRR credit institute. So already the regulatory hurdles to kind of become a regulated issuer are high, and then all requirements from the AML directive, from the travel rule, apply to those types of stablecoins. And let's be honest, what are the type of stablecoin use case that we see today in the market that had some significant scaling? That was a Web 2, Web 3 kind of gateway. It was always at the crypto to fiat gateway function that stablecoins served. And I'm at least I have a lot of respect designing a stablecoin that is fully compliant to MiCAR and at the same time fulfills this crypto fiat gateway function. I think it's possible, but it's definitely something where you have to bring together different competencies from a regulatory, technological, and business case perspective to really make this a successful approach. And I think we should be happy to have that regulation, but we also should see the challenges that come to really issue a scalable stablecoin product that is really generates some value in the market and is not just only kind of stupid money without any interest that it's paying to its holders.
Okay, so now you were talking about stupid money, but also about scalability. So maybe turning back a little bit, if we think about stablecoins and the potential they have, at what point do they start to pose a threat, so to say, to the financial system? Is there a threat? Is there something that needs to be further done? other panelists? Everybody know that would
well,
be
again, look,
interesting.
under MiCAR regulation, a third of reserves have to come into commercial banks as deposits. So that means that this product is not competing with commercial bank deposit market. I used to say that we now run the crypto-friendly narrow neo-banking solution, which potentially everyone wants. And if we were able to pay interest, then suddenly all deposits from Deutsche Bank and other banks would be gone, because why would you take a risk of a credit institution with just 100,000 insured per account, where you can have a central bank account with some yield and then crypto-friendly functionality? It doesn't make sense to kind of really store your funds in an old legacy bank. And Credit Suisse example earlier this year confirmed. I mean, you could have like 150 years old bank that can be gone in 2 days or 2 weeks. So MiCAR implicitly states a third has to go into commercial bank deposit market segregated accounts. So in that way, we'll be still supporting the commercial bank deposit market. Another third we could allocate to bonds, which is exactly the business model for this product. We will allocate to government bonds. We'll generate some yield, unlevered. It's 1-to-1 always, right? But we'll generate some yield, and yields are finally above zero, right? And I had been in the market for a while, so I lived in an era of falling rates, zero rates, negative rates, and now rising rates. And in fact, my central bank account pays me nothing. Like, they pay zero when interest rates are positive, and they charge me if interest rates are negative. This way, they safeguard the commercial bank deposit market, and it's smart. So, but at the same time, I could compete in the Web3 space. I could offer APIs, I could offer innovative payment solutions, I could run on several blockchains. So I create a downstream application that is applicable to in the new economy, in the Web3 economy. And this is where I compete, supplying reserves at the central bank and commercial bank level, so they're properly safeguarded. So totally not a risk to the fiat and banking system, but it's not fractional reserve, it's 1-to-1, it's unlevered, and unlocking actually two things. First, innovation, and second thing which ECB always wanted. If you read their report, Role of Euro, in every report they say, we want to use Euro outside Europe, we want to increase adoption of Euro outside of Europe, but do you know how hard it is to get a Euro bank account if you're not inside Europe? It's almost impossible. So this product, this solution is literally unlocking the whole world population to Euro as a currency. And if you ask me as a previously hedge fund manager, micro analyst, Euro currency has one of the best characteristics in the world right now, relative-wise. Euro still has positive current account balance, regardless of all the higher input costs and energy costs. It's totally against the US, where you've got a triple deficits across the board, right? Euro as a nation sells to the world more than it buys. So longer term, this is just a very stable construction, and the whole emerging economies could use this currency against their inflationary currencies, but they have no access to it. And blockchain product unlocks exactly that. Stablecoin unlocks the use of Euro as ECB wants in a safe and regulated way to whole world. And I think it's quite exciting.
Very interesting. So maybe coming to another topic. So MiCAR does bring significant changes in the regulation of stablecoins. We've heard that. No financial risk. But I'm wondering about what challenges are left ahead of us. And I want to turn to you, Patrick. So in your opinion, what are the most pressing challenges that are still left when we talk about MiCAR starting in June of this year, because we still have all the ESMA consultations, we had the EBA consultations, so there's still a lot of that's kind of left open. What is your point on that?
Yeah, let me focus on maybe two or three specific ones, just to make it palpable for folks in the audience. So I think one challenge that is obvious to anyone is the timeline. You already mentioned it. MiCAR will enter into application at the end of June for stablecoins. And so we only have 4 months left now, while actually some of the regulatory technical standards that should guide the specific implementation of those businesses have still not been finalized. Just to give you one example, the regulatory technical standards on what exactly constitutes high quality liquid assets that those e-money token issuers can invest their reserves in still needs to be finalized and published in its final format. And there's, a few others, half a dozen others that are still to be finalized. And so that makes the preparation and the implementation of the business a very challenging endeavor, since there's only so few months left. Another one, I think, another challenge stems from the fact that since e-money tokens are defined as a crypto asset in MiCAR, but also clearly should be deemed to be e-money as other forms of e-money, there is a kind of dual regime that applies, because an e-money token is at the same time a crypto asset and also e-money. And that makes the regulatory treatment for many purposes, for payments purposes, for AML purposes, etc., a bit challenging, because it's not 100% clear for what kind of activities and transactions, for example, it should constitute a crypto asset versus e-money. For transactions, the Payment Service Directive applies, and other such questions. And so the dual treatment of e-money tokens, I would say, is one. And maybe also looking at us specifically at Circle and other global companies that are trying to bring their stablecoins under compliance, I would say maybe just one final word. Different from other regulatory regimes for stablecoins that are being discussed and adopted around the world, for example, in the UK or Japan, MiCAR actually does not have a separate regulatory path for those stablecoins that are global and already issued outside of the EU, as, for example, in the US or elsewhere. Other jurisdictions have that. And so the question really becomes, since you have to issue an e-money token out of the EU, you might enter into quite complex and challenging double issuer constructs and scenarios, which are not easy to handle. So this just to give you an overview of some of, I would say, the challenges that we see right now.
Greg has a reply.
Yeah. I mean, I support. I think this is a real chance. 1st of July, some prosecutor in one of the 27 member states just wakes up and thinks, wait a minute, dollar stablecoins are illegal to trade in Europe right now. So let's subpoena this exchange or that service provider or this one. So it's a real risk. People are completely asleep at the wheel that there is a chance European prosecution will go after everyone who touches stablecoins that are issued outside of Europe. And I really wanted to bring this to attention to the audience and to discuss with panelists, because very few people have a strategy against that right now. But the risk is definitely real and significant.
Just very, very briefly, a quick correction. Dollar trading is not illegal. There's no paragraph, no sentence in MiCAR that would say that.
Basically, any stable coin that's backed by any fiat, if it's not registered outside of Europe, could be classified as an illegal instrument. So it's not dollar per se. It's just anything that's not under MiCAR and issued outside, inside from Europe.
Yes, but obviously there is ways to make also dollar stablecoins or stablecoins that are based on other currencies MiCAR compliant. Mm-hmm. So the question is really who is compliant and not compliant, and not what kind of currency is the stablecoin referencing.
And maybe to just add on your point, Patrick, I think the true challenge really is to design a MiCAR compliant stablecoin that still has some utility and use cases that it's actually gives value to this new form of money. I'm totally convinced that there will be forms of MiCAR compliant stablecoins that will fulfill this value proposition, but it's definitely something that requires some, let's say, intellectual power also by the issuers to really come up with a smart design that fulfills especially all the requirements on the AML and travel rule side, and at the same time means that that's for example, a programmable and very uniform version of a stablecoin that is applicable in various use cases related to the Web3 ecosystem and to other types of crypto assets. And I believe really this will be kind of very interesting to see how different issuers among the European Union will come up with smart implementation approaches, also combining technical features of a stablecoin and the regulatory requirements that they are facing under MiCAR and all the other regulatory requirements applicable as they are e-money token as they are crypto assets under MiCAR, etc.
Technical stuff. Ralph, you want to weigh in?
Yeah, and the opportunity is very large, right? Because let's face it, USDT is the de facto settlement instrument for cross-border trade in quite a few jurisdictions in the world, right? So I mean, there is, and if we think about that in the long term, the trend is always to a more trustworthy environment. The opportunity is very large to really capture quite a bit of that business, if you want to say, right? So imagine you're a merchant in Vietnam and you have a choice between, a digital yuan and a digital euro, or a USDC. Maybe you want to have the digital euro because nobody can push the button and get it back, for example.
Yeah, and I believe we should also see like MiCAR stablecoins and the opportunity that they provide, combined with all the other, like with the regulatory framework that MiCAR provides for crypto asset services in general. Because what we will see actually is a fully regulated market for crypto services among the entire European Union. And definitely this market will require some form of regulated stablecoin on the settlement side. So I think MiCAR in this sense is also quite smart as it combines a regulatory framework for crypto asset services and at the same time establishes some framework for a regulated cash settlement instrument that can be used within this new ecosystem. I just believe it will take maybe a bit more time than some market participants expect to kind of see this new regulated market environment to really evolve and really get into scaling.
But we're in a competitive environment, right? So the question is exactly, how this will be implemented. And, there could also be thank you for bringing up the doomsday scenario. When you think about the market capitalization of many chains, of many public chains, they really depend on, transaction environments which are enabled by stablecoins. So, if there is going to be some challenge to that business model, which currently is, yield-seeking, fee-generating, casino environments that rely on liquidity, you could see a massive correction in the market capitalization of some of these public chains.
Yeah, I just want to mention, and sorry for being this risk manager here today, but 80% of dollars transactions, including USDC, are settled through the United Texas Bank now. It's, again, a massive concentration of liquidity that, the Fed could pull the plug on it any day. And you'll have 100 billion of liquidity just locked inside the dollar contract. Yes, some of them have assets. Okay, I'm sure Circle has assets through BlackRock, but what if they won't be able to settle against customers? Tether accumulated some Bitcoin, right? So for some inner circle, he will settle with that Bitcoin. But what will happen for the rest, with the rest guys who hold these instruments? So I think there is a significant opportunity for regulated stablecoin to operate in this market, and the opportunity is clear. But we need to see some follow-through. We need to see European community to finally wake up and start using euro-issued instruments instead of the offshore or even dollar ones to some extent. Because if you live in Europe, if you have euro as your base currency, your salary, your expense account, why would you expose yourself to the dollar instruments at all?
So what is still lacking? Why aren't we seeing more euro-denominated stablecoins? MiCAR is around the corner, but do you think that will happen sooner, or are there other factors besides regulatory uncertainty?
Well, again, sorry. First of all, there is a product lack of product features which dollar stablecoins offer, right? So for consumer, of course, liquidity is one of the biggest factors. Second is utility or fungibility. So we can deposit these dollar stablecoins to various places, infrastructures like exchanges, etc. So that fungibility is there, and it's already a part of the product. When I first came into this market back in 2018, the product was just a one-to-one fiat stablecoin with a proper audit, right? Now it's a variety of things. You need to have a proper onboarding. And by the way, Patrick, no offense, but Circle just stopped offering individual accounts. I mean, how can you run a stablecoin if you're not offering individual accounts, like individual onboarding, fast, efficient one? So there are European service providers like Membrane, Monerium, us. We offer individual accounts. You can onboard today and buy and sell stablecoin. But it's not just that. You need to have this product available for trading in crypto ecosystem, in DeFi markets, in centralized exchanges. People want to use it as collateral, right, to trade derivatives. And there is MiFID regulation coming for that, and that's pretty clear how to run a derivatives trading exchange in Europe right now. But the people need to use the stablecoin as a collateral to trade there. And for major stablecoins, non-dollar ones, it's still a problem. This BD is still a problem. This adoption is still a problem. It's really hard to get into these marketplaces and integrate there.
So I want to give Patrick, you the chance to reply to the question and also reply to Greg.
Yeah, maybe first, I mean, the business models differ, right, between stablecoins. We're focusing mainly on B2B, and others that Gregory mentioned, such as Membrane, for example, do it the same. I think if you look at the market right now, and obviously we have a euro-denominated stablecoin right now also that we're issuing and that we're trying to onshore to the EU and issue as MiCAR-compliant EMT out of France. If you look at the market, it's by far the most accessible for retail right now. It's the most listed across centralized exchanges. It's the most liquid, etc. So if you look at retail access, it's by far the most accessible. And briefly, to get back to your question, Benedikt, I think why haven't euro stablecoins not picked up? I think it's mainly due to the structure of the current crypto markets. If you look at where stablecoins are used today, it's mainly in crypto markets, right? I think we would all agree there. And crypto markets right now are kind of insulated. There are a global market. They are not that inherently intertwined with global finance, with real-world economic activity, etc. And that's the reason why just since liquidity begets liquidity and global markets and global liquidity depth is always more appealing than some regional small liquidity pools, for now, these markets are mainly dollarized, such as other commodity markets globally, by the way. I think that will change, and also why we are doubling down on our efforts for EuroC, for example, as Euro stablecoin, is because we see a clear shift from more speculative activity in these crypto markets towards more and more real-world activity, for example, in the capital markets with the EU DLT pilot regime, where you can now in the future trade tokenized stocks or tokenized bonds against e-money tokens, for example. We see a shift in payments as well. We have exciting pilot programs launched with SAP, for example, in Germany to use stablecoins for cross-border B2B payments. And so I think as the entire space progresses more from speculation to utility, we believe that more and more European players will start to use euro-denominated tokens for tax reasons, for accounting reasons, for FX reasons, etc., etc.
I think that leads nicely to the last part of our discussion, and I think we're headed to an outlook. Like, where is it all going? We have MiCAR right around the corner. How do you guys anticipate the landscape evolving when MiCAR comes into effect, when stablecoins are regulated in the EU? How will that affect the EU, also maybe the world? Leading in regulation is always what the EU says, so how do you think about this, Ralf?
Well, as a public protocol, it opens a lot of questions. As I mentioned in the beginning, exposure of the individuals that are involved, certain of these entities, what is the jurisdictional reach, etc. So, because by nature, open protocols are open. People can do more or less what they want, and and there could be a representation of certain assets that look like a stablecoin, and the regulators will have issues with that for sure. So I think that will be a challenge for specifically for public environments.
Obviously, regulation inflates costs, so it's really expensive to run a euro-denominated stablecoin, going to be more expensive. So obviously in every industry, when costs rise, the consolidation happens. So there will be some sort of consolidations, M&A, some mergers, and ultimately there will be bigger projects, but with combined efforts of teams that were running some startups. For sure, there will not be like a lot of euro stablecoins because it's very expensive to run one. But there'll be quite a few successful with different use cases, maybe operating on different chains, because right now we have like 100+ different blockchains around. We issue on, I think, on 7 right now, with maybe 3 coming. And who knows? Definitely there's going to be a multi-chain world, and I guess there'll be some pockets of liquidity in all these chains. But among the issuers, for sure, will be consolidation.
Jens?
Yeah, I'm very optimistic, all in all, I have to say. I think, as said before, MiCAR creates the biggest single market for crypto in a regulated way globally. So I think that's a huge opportunity for Europe at first. I think, yeah, truly the challenge is to define a compliant, MiCAR-compliant stablecoin that truly carries some utility and really can get into scaling is something that, yeah, I think it will be exciting to see how the industry and the ecosystem is kind of solving this challenge that is definitely there, but from my point of view, solvable.
So Patrick, last question to you. So how do you expect the market to change, and how will stablecoin issuers need to adapt to this changing market in the future?
I mean, much has been said already. I agree. I think the market will be more concentrated. We won't see, dozens and dozens of crypto exchanges or trading platforms in Europe. I agree, we won't see dozens and dozens of stablecoins. I think use cases and industry and players will rally around the successful ones, depending on use cases and verticals. I think the market will be more institutional, that's for sure. We have seen the first banks tapping into the space with Société Générale in France, or even DWS, the asset management arm of Deutsche Bank in Germany, that plans to launch their stablecoins. And I think MiCAR will propel a wave of institutional activity in this space, be it stablecoins, be it payments, be it brokerage of crypto assets broadly. I think the key piece here, I think the next 12 to 24 months will be a bumpy road, because as MiCAR enters into application, different regulatory pieces enter into applications, such as the transfer funds regulation, DORA, etc. And there are many open questions. And I think it will take a while until all the service provider and the market actors have figured out how to operate under those constraints. I think it will be a bumpy start. But I think the incentives are aligned also on the regulatory side, on the industry side, to making that a success, and to strike the right balance, right, between creating that regulatory clarity and following those rules, but at the same time not completely prohibiting competition, innovation in that space due to too high operating costs and compliance costs. And but overall, I think I'm optimistic. It's just up to us, I think, the industry and together with the regulators, to making that a success.
All right. And I think with this, I would like to turn back to you now, to the audience. So who now, after those 40 minutes and listening to the experts, thinks that they understand what MiCAR and stablecoins have to do with each other a little bit better? Show of hands. Yeah, that's everyone to the audience listening on the screen. So I would say a big round of applause and thank you to our panelists.